If you went to the room, you saw I took more off the table in Canada at 36.13, the dollar right around here. And I'm reassessing because, I've been in this position. One was this low, July 25th, so July 1st. So, it's not been that long. I guess for me, 10 days is a long time. Anyway, yeah, the momentum is really starting to drag here. I'm not saying that we can't head up, but I still keep coming back to this. And I think we have to satisfy it. And, I did talk when I was a buyer at 96 that there was potential for 95, which would have been more equality on the weekly. So, it's actually in the high 94s, but let me just show you again that based upon this break, if you take it to these lows, which were 99, it was more like 15. So, 15 from 110 is going to give you 95. We're not having a bad week. It's an up week. It's actually a 2-week reversal. So call this a little bit of just trader intuition and just the way the charts are acting. And there really hasn't been anything impulsive. It's just been grinding, grinding, grinding. Doesn't mean that we can't see 78 or so. I might even do a tactical short if that happens because for most of my career, not always, to fade a market that has made confirmed lows is usually probability of a new low is fairly high because markets generally don't bottom with a 20 RSI reading here, 22, and they generally don't top with 80 RSI reading. So this did a great job of got about 150 pips, but at times could come in a couple days. Took a while, um, and it's not going to take much to trigger the next decline. I would say back under 96.70 now. So if you want to stay because you think there might be more left into early next week, which is a possibility, you keep your stops here under 96.80 now. You could trail it. So worst case scenario is you make 80 on it, okay, instead of, the extra 50, but maybe you could get another 50. One of the reasons that I'm beginning to lean this way is when the dollar bottomed at 96. This was the euro. And really all we've done is really been sideways. Now they could get, Europe could get some type of tariff problem, but to me it looks like a triangle. I thought it was going to be a descending triangle. We tried to break down. We're right there, right above it. And now I think that this implies that we break out to the upside of it over 1740. And what triangles do is they're usually a 4 in Elliott, and then the next rally is a terminal thrust. So this is what has me leaning and actually executing on the action of lightening up on dollar positions. And what's turned into the relative strength has been Aussie since they didn't cut this week. I think Aussie has more upside, maybe at least another 100 or so. And, that doesn't help the strong dollar cause. Yen's been a monster, okay, but it's starting to run into resistance here. And I think is due for some type of correction. This is going to be the one you want to buy a break on. And maybe if we get 95 in Dixie, we could pull back down here towards 144.5 or so to correct this, some type of ABC. And then you're going to want to buy the yen for the move to take out the confirmed high. So we have the opposite situation in US dollar yen that we had in the dollar. So dollar was a confirmed low, yen a confirmed high, which, I was talking about down here at 43, that the next move was going to take it out. This was the best call of the month. okay, for over 400 pips. I didn't ride the whole thing, but I identified it before it got to 43. Taking a look at yields, which are pretty closely correlated. Looks like they held where they have to, and we're going to get another wave up here. We'll see what happens, how far it goes. TLT, I, let people know about the breakdown. All we did was rally back to the breakdown. As long as we stay under 87, if you're short, you bought puts, you don't want to see it close back above the 87 level again. WTI under pressure. I need to find a better chart on that. But I do want to talk about the S&Ps. And we did have a divergence here. Okay, it's the first one. Up here, we were confirming at this high. And we just made a marginal new high yesterday, and look at that. And we're getting a red candle. So I think at least 61.30, which was the prior high that held before the April debacle, is a natural number, and 59.20 is going to be important for any kind of continuation. We get that, maybe we could see this 5,700, which is an unfilled gap, occur over the next month or so. But I wouldn't have FOMO up here. I know I sound like the boy who cried wolf, but wasn't calling out shorts. I'm just trying to be patient to wait for a correction to buy certain things that I like if they fall prey to the overall weakness in the market. And Bitcoin, I was totally wrong about it. So the beat goes on. Huge move, starting to blow out divergence. I was right about it here, and this rally didn't work. So there again, newsflash, Pinker was wrong. So we see a lot of these markets coming in right now under a little bit of pressure. There's Apple, there's Meta. All of these are due for some type of correction. Google never took out 183 even during a melt up. I don't see anything positive there. Netflix has been a monster, but pulling back, but has a confirmed high. Microsoft and even Nvidia, you know, uh, it's blowing out all kinds of divergences here on the daily. Uh, that's what they like, guys. They like the chips. I talked about how the chips might lead for a while, and then here you go. Here's Uber. If we could get back under 94, the throwover would be uh, taken out. And one of my viewers wanted me to take a look at some of the home builders. So here's D.H. Horton. Okay, it's had a real nice advance uh, before the bonds pulled back. Here's a daily on it. So this might be one to buy in the pullback if we get some type of correction in S&Ps. Maybe back down towards this 125 level. And you would think that they would start that is a possibility with yields rising. We also have, here's another housing stock, Lennar, see if it has the same picture, weaker. So I would go with the DEH Horton over this. This one could even make a new low, but it would diverge and I would try it. Because after this next wave down, and I do think it's possible in TLT, like I've been saying, that we could actually recheck the Moody's low that we had here, right here. Okay. And then maybe we have a 3 drive to a bottom formation. But I think you wait to buy bonds until we take out this 83 level. If we have something like this from here, it takes you to 80. So still bearish at treasuries. Um, looking for looking for another low in the dollar. If not, I'll find finesse or find another entry. Uh, put that trade in the bank. So next time we're going in trying to bottom pick the dollar, We're doing it with profits rather than principal. So I still think you avoid the bonds right now, and I think that this will be the driver for some type of correction, minimum 6,100 in the S&Ps, and maybe we try that major 59.20 level pivot again. So hope everyone had a decent week in the currencies, and you know, I think it's my highest percentage hit rate has been in the currencies. Maybe that's all I should trade. Anyway, always looking for danger. Dale Pinkert at Forex Stop Hunter, coach at Trading View, coach at TradeGate Hub. So everyone have a great weekend. Do your work over the weekend, and we'll come up with some scalps. I think you really have to be more short-term oriented with all the tape bombs that are coming out every day, like the copper one the other day. So have a great weekend. Um, Hope I'm adding value to what you're trying to accomplish as a trader. It's not easy. And remember, most of all, don't just count your pips, count your blessings. Adios, warriors.